Hi guys, welcome to the MCQs of CA Inter Financial Management. I'm CA Anuj Jalota. We are taking care of your MCQs completely, whether it's costing or it is FM. Every question is being discussed with detailed logic. So therefore, not only your things are revised, but also to be ensuring that even in future, these things will be of great use to you. Let me also just remind you, every Saturday, Sunday, on our YouTube channel, free complete lectures of costing are coming. These lectures give you everything that is there in the module, plus any future questions that have a chance of coming. All those questions are being put. We don't require any money from you. We only require that your concept should be good. Free soft copy. Apart from that, rankings of every question, summary notes of each and every question are being there in the soft copy. Our book boasts of being the most complete book, and whatever has been asked from last 25 years has been almost whatever has been there in our books. Let's start it off. The question for today. The chapter that we all have is management of working capital, and one important part of this entire chapter is factoring. Not many people do questions on factoring, but then it has come in past, it can be coming in future. All our students know how to be solving every advanced question of factoring, no matter how tough it is, including the case study also, because the case studies that are there in the module also have factoring as a part of that. So let's start off the question for today. Factoring is a method of financing whereby a firm sells its trade debts. Trade debts means debtors, accounts receivables, okay, at a discount to a financial institution. This statement is, give me the four options. This statement is correct. This statement is incorrect. This statement is partially true. This statement, I cannot be saying what it is. So reply the correct answer. Okay, now see, what do you mean by factoring? Now, factoring is a modern form of financing. Okay, try to be thinking. Usually, if you are in need of money, you will do what? You will go to a bank, you will borrow the money, and of course, at that time, you'll be passing entry, cash bank account debit to something like bank loan. So therefore, something comes on the asset side, that is cash bank. Something comes on the liability side, that is nothing but bank loan. But we are trying to be avoiding this bank loan because it poses a negative thing on my balance sheet. So therefore, we thought of one small thing. On my asset side, I already have debtors. Why not to liquidate the debtors only and try to convert that into money? So therefore, I called up my debtors and I told them that I want the money today. I had given you a credit period of 60 days, but I want the money today. Those guys will keep the phone. They are not even interested also, because if I've given them a credit period of say 60 days, those guys will pay me after 60 days, but I'm in urgent need of money. So what is to be done? One of the services that you all can be using is called as factoring. Now, factoring in this case is a service whereby you can try to sell your debtors to a factor at slightly a lower amount, okay, and hence you can try to be converting your debtors into cash bank. Like alt line is one of the biggest factors in the world. Many of the banks like HSBC, like Deutsche Bank, they are also involved in this kind of a business of factoring. Factoring is today a very big thing whereby a company need not bother about the money to be received from the customers. You might not bother about your collection department's expenses, okay. All these particular work you can give it off to a factor and he'll give you the advance as such which is required to run the business. So factoring is or a factor is a financial transaction where a business sells its accounts receivables, that is invoices, that means debtors, okay, because the debtor will issue an invoice to a third party called as a factor at a discount. This is done to obtain immediate cash flow instead of waiting for the receivables to be paid by the customers. Now, factoring is today a very big business, as I told, but then there are many companies who are making use of such kind of a service to make their working capital position far better. It helps them to convert debtors into cash bank immediately. Now, what does a factor do? They give you advance funding. So the moment you want the money, okay, they will immediately give you an advance against your debtors. The second thing, they also try to recover the money from the customers for you. Okay, so therefore the pressure on your collection department will always be less. Okay, obviously nothing comes free, so therefore there will be a fees, that is a commission that these guys will be charging. Plus in this case they will not give you the complete amount, they will always discount it, because they will charge you interest also for the advance payment that they are doing, say for 60 days. So if I have to try to summarize, how does factoring work? So therefore there is a company. You can also try to be thinking that company is a seller. It sells the goods to the customers. Okay, so therefore the goods are sold. Now company sells the goods to the customer, say payable in say 30 days. Okay, so therefore customer has to pay after 30 days, but we were in urgent need of funds. So company goes to a person or an institution called as a factor. Once they go to the factor, okay, they sell the invoices that they have raised against a customer to this factor. Factor will do all the credit checks to ensure that it's not a fraud transaction. Okay. Now, once all the checks are done, okay, factor tries to give an advance to the company. Okay. Whenever it is giving an advance, obviously it deducts the fees. It deducts the reserve. Okay, reserve is just that nobody will give you complete amount. Okay, if you keep something as mortgage, you will always be getting a loan which is lesser than the amount of the security. Okay, so therefore reserve is there for that. And also actually they will also deduct the interest beforehand only. Okay, now so factor will be deducting reserves, they will be deducting in this case the commission. Commission is called as a fees. Okay, and fees will include interest also, to be honest. Okay, now say that 30 days are over, so therefore customer will be paying the money to the factor as such. Okay, because factor will be taking that invoice to the customer to be asking for the payment. Okay, so therefore customer will be paying to the factor. So factoring is a method whereby firm sells its trade debts at a discount to a financial institution. This statement is absolutely correct. So answer should be A over here. That is the correct answer. I'll see you all next time with another question, with another logic. Till then, take care guys. Bye.